Okay, Gary Schlossberg is global strategist at Wells Fargo Investment Institute. Gary, great to have you with us here on the program. Thanks very much. Will this Fitch downgrade make any difference at all? Or you think it's well understood there is a precedent and the shock value is not as high? What's your sense?
Well, I think the market, as evidence today, looks through that downgrade to the extent there is any concern in the market. The dollar, the U.S. bond market tend to benefit from that safe haven trade. That was true in 2011. To a lesser extent, it may be true this time as well. There may be some technical issues. Some of the covenants in U.S. money funds and bond funds do require a AAA rating for holdings in some of their portfolios. But we don't see that being a major issue. There may be a bit of turbulence, but I think it's really going to be the fundamentals out there that drive the market, the outlook for inflation, economic growth, and the like.
Mm-hmm. So let's talk about the fundamentals, Gary. Sometimes markets use these things as an excuse to start lightening positions, right? Now, would the fundamentals support that view? When you look at, for instance, I was looking at the ISM numbers this morning. They're still in contraction zone, though the GDP number was pretty robust. What do you make of all things put together of the way the U.S. economy is shaping up right now?
Well, I think the rally was easily explained. A very optimistic view on inflation, on economic growth, the implications for monetary policy, the Fed moving to the sidelines. Our view is that economic growth is winding down, but that sharp drop in inflation that we saw in the first half of the year may be losing a little momentum. Inflation may be moving, leveling out at a rate well above the Fed's 2% target rate. That could cause some concern in the market, as well as the less optimistic view of Fed policy. We could see another 1 or 2 rate hikes before the year is out, even as the economy winds down. The environment spinning a bit, turning in the other direction away from the bond market.
Hi, Gary. Good morning. Then what would the call be on
Morning.
global equities? It's been a good 2023 so far. Developed markets, emerging markets, it was getting a little bit too easy. Do you think a good some amount of consolidation, maybe a bit of a pullback for global markets would be warranted?
Well, I think you might see some consolidation. We may already be beginning to see the early signs of that. Again, our view is that the economy will lose momentum, the trajectory a bit flatter than we anticipated, but we still think there will be a slowdown, growth slowdown, perhaps even a recession around the turn of the year as the market begins to focus on that weakening activity. We think that could create something of a headwind for the market. And as I said, with inflation perhaps leveling out at a rate well above the Fed's target level, yields could move up a bit, rates could move up a bit, and that could lead to some compression on those PE multiples as well, which remain quite high.
So Gary, we're in very interesting times. I mean, as you say, if we're getting more rate hikes from the U.S., which the market hasn't penciled in, and maybe higher yields, this is also a time where Japanese yields have started moving higher. So given this flux, what's the best guess? Could this money head its way to Asia, to emerging markets, as there's perhaps some risk aversion that develops in the U.S.?
Less risk aversion than perhaps money moving at the margin back to Japan. We have several $1 trillion of money that has flowed overseas as a result of those artificially low interest rates due to yield curve control over the past couple of years. As those yields are allowed a little bit more flexibility, we could see money moving certainly out of the U.S. And some of that going back into Japan to the benefit of the yen, to the detriment of the dollar and the U.S. bond market. I don't see that as a major driver, but certainly at the margin, given everything else that's going on, the fundamentals I mentioned turning a bit, that could create an added headwind for the bond market.
All right, Gary, we'll leave it there. Thank you very much for your time, and it's a pleasure, as always, speaking with you here on CNBC-TV18. We'll take a quick commercial break here. A list of top stocks to watch with a research team coming up next. Stay with us.